So welcome everybody. Glad to see a lot of people here that hopefully got the invites and you got copies of the sales tool and the track record and the rehab budget. There's going to be a new sales tool going out today or maybe tomorrow. We'll see. It might be end of the week. And we'll also email that to you. All right. So happy April, everybody. As always, we're just going to start with some different things that we're working on. We're going to talk about some of the different programs that we've been introducing recently, making sure that you guys are taking advantage of them. If you have any questions about it, we have a Q&A at the end, so please stay on. We want to hear everybody. So if you have any questions about anything we're working on, anything that's to come, there's a lot of really exciting things here, including some additional white label things we're working on. So some pretty cool announcements coming up here. I just want to start off by talking about April. It's an awesome month so far. So we're having one of our best months in the history of TVC. I do think it's going to be a record-setting month, but there are things that come with that. So everyone here is going to have loans in our system trying to close this month. We're about halfway through the month, and we just got to make sure if you have those loans in and they have to close this month, that we got to get them ready, right? If we're already having a record-setting month, the end of the month is typically way busier. So how can we get them ready? Get all of your loans underwritten. We have the upfront underwriting system. Please ensure that all of the loans that you want to close, try to push them into underwriting as soon as you possibly can. So if you're the last week of that month of this month, or maybe even the last week and a half of this month, if your files aren't underwritten yet, but just that initial underwrite, you could really be shooting yourself in the foot, and they might not be completed until next month. Not the underwrite, but the closing, right? We want to close everything on time when we can. So please make sure you're taking advantage of that early underwrite. And then two other things that we've been seeing. Whenever we rehab review your property, we're going to come out with questions. Make sure you get those questions back to us as soon as possible and make sure you answer all of them. If we ask you 4 different questions, make sure all 4 of them are answered. If there's any delays there, it just causes a little bit of back and forth. We get to update one budget. We'll come back to, hey, I still need these 2 questions, and that's going to waste a little bit of time. And then prep borrower for those final docs. When you guys are getting that CTC, we have a couple documents like the ACH form or the LE or anything that we're going to be sending to you. Anything that your borrower needs to sign, just prep them so that you can get them signed right away and get it back to us so we can move it to our closing department. The last thing, and this is kind of away from the first 2 points here, is our price matching. I just wanted to make sure everybody knew about our price matching. It's not guaranteed on all of our products, and we understand that our products, if you go somewhere and you get a 7% rate, but it's a 60% LTV fix and flip, my 90% LTV fix and flip, I'm not really going to try to compete with the 7% rate there. However, if you have a competitor's term sheet for one of your borrowers, even if you're going to deliver them somewhere else, right? And TVC is losing by a 1/4 point in rate on a DSCR loan, give us a shot. We'll see if we could rate match that. It's not guaranteed, but we're looking for price matching on fix and flip, ground up construction, rental finance. If you send those in, it also helps us know where we're at in the market. So if we get a little bit behind and we don't get those price matching requests in, gives us an opportunity to fix it, right? And maybe get lower rates for everybody on the call, which would be great. All right, let's jump to the next slide. So I wanted to talk a little bit about conditional approval success. I see a couple familiar companies here who are really, really strong at getting their files conditionally approved. This system is designed so that when you first submit a loan to TVC, your loan should go right past intake and go right into our underwriting department. The intake department should merely just be checking that everything is there, confirming it, and moving it forward. So if you've ever submitted a loan and the intake department came back with conditions, that's because your file was insufficient, right? It's pretty common, right? You're missing a doc here or an e-signature there, or maybe the application wasn't completed correctly. It's really important, especially as we come up to the end of the month. And for your future success, you want to move these loans really quickly, is to have that awesome success email where it says, hey, congratulations, we've submitted your loan directly to underwriting with no conditions. We really want to see that happen. And just doing the math, even though we have an early underwrite system, files that get through an early underwrite and get their conditional approval, our closing rate on those files jumps up by 20%. So that's just math, right? Get it conditionally approved, and you're going to have a better chance of closing your loan and making money off that transaction and working out for your borrower. Yeah, and as long as you get that conditional approval, ideally before the appraisal ever comes back, you're much more likely to execute on your closing date. if you're not submitting your files until you already have an appraisal, which happens, right? If you're using a different company or you potentially had that loan placed somewhere else and you're switching it over to TVC, sometimes that's at the last minute and we have to execute really quickly. But for the files that you know right from the start are coming to TVC, get them in, get that conditional approval done before that appraisal comes back. It's really gonna, skyrocket your execution with us. All right, I wanted to talk a little bit about this. You guys might have seen this in the sales tool on our DSCR tab. You might have also seen it in our fix and flip and ground up construction tabs. We have a new program called Construction-to-Perm. It's all individual loans still, but what this is we've been finding that a lot of loans that we're doing fix and flip or ground up construction loans on, the borrowers are actually keeping those, except they're refinancing out of the TVC loan into somebody else's DSCR product, right? So we're asked for payoffs. We get to follow along and see that we're getting paid off by a different DSCR lender. So we wanted to retain more of those deals, right? If there are customers, if they're your customers and you're delivering them to us, we want to keep them in our ecosystem. So what we're doing on those transactions is we're going to waive all of the flat fees associated with a rental finance delivery. So it adds up to about $1,700. And that comes out of your delivery fee, right? So right now that's deducted from the income that you're making on a per DSCR transaction basis. You could do two things with that. You could keep those fees and charge whatever you've been charging. You could pass it through to your borrower and give them a discount. Maybe you could pay for their appraisal. Just use it to get more clients in, right? Keep your clients happy and keep them coming. So again, in this product, you have to be paying off a loan that was originated through the TVC ecosystem, right? So as long as it's paying off a TVC loan and it's going into a DSCR loan, you could take advantage of that delivery fee discount. In addition to that, you could take advantage of our 80% cash out on a refund basis, right? If we did the fix and flip or we did the ground up construction, we have the original HUD. We know exactly how much we can refund your client, and it's gonna be much easier to get them that 80% cash out, and we'll already have all the documents, and that second closing is gonna be way quicker. In addition to that, I just wanted to also give everybody an update on the DSCR product. Across the board, if you guys have been talking to us at the various events that we've been going to, we are very interested in increasing our maximum loan amount. We want to see larger loans, not only in the DSCR space, but in the fix and flip and ground up construction space. You may have noticed that we've increased our maximum loan amount to 5 million. We're looking to increase it even further than that. So if you get an opportunity, and it has to be a good opportunity, we can only close so many of these to start out that are above 4 or above 5 million. Let us take a look at it. Let's see what we can do and potentially close that transaction. And when it comes to DSCR, we guidelined up to 2.5 million now. Just note that it has to be validated via a long-term lease or a 1007. The DSCR has to be a 1.15 and the FICO has to be at least a 700 score. So those deals have to make a lot of sense whenever we're taking a lot more risk on those bigger loans. We want to do it. We want to be the lender that's closing $7 million fix and flips and ground up constructions. In order to do that, we've got to get comfortable with them up front. We've got to close on them, and then we got to execute, right? That borrower has to be successful with us on those opportunities because that's what's going to open us to getting even more opportunities. Next, we want to talk about our multifamily and multi-asset transactions. So we've been getting a ton of momentum on our multifamily and multi-asset product, but not that much from TPOs. So I wanted to make sure everybody here was aware those multi-tabs exist in the sales tool. And I just wanted to talk a little bit about those programs and happy to answer questions about this program when we get to the Q&A section. Just to define them, our multifamily product is when it's more than 4 units, right? There's not a limit to that unit count. The way I like to think of it, these are all fix and flip ground up construction, right? So for multifamily, if you have a 30-unit complex, right, and the borrower is going to build that, or maybe they own a 30-unit complex and 20 of the units are not in good shape, right? So what they want to do is they want to refinance, rehab those 20 properties and increase their rental income. The multifamily deals are based off of net operating income. So if you're not familiar with that product type, what that essentially means is imagine you were doing a fix and flip, but on the fix and flip, the exit was a rental loan and the entire underwrite was pretty much based off of your DSCR exit. Right? So on those multifamily loans, we have to ensure when the client finishes their project, when they build that 35-unit apartment complex, that they're going to be able to refinance out of our loan without having to bring a ton of cash to the table to qualify for whatever their takeout agency financing is. So we figured out what that income is of the property. You minus out the costs. It's called net operating income. And when you submit a multifamily deal to us, all you're going to do is just fill out the sales tool. You're going to email us the sales tool. You're going to include a pro forma. So it's going to be something that every borrower that does this product has their own determination of what that net operating income is going to be. Send us that. We want to see where they came from to get their net operating income. We're going to do a market analysis as well. And if they're fixing and flip or ground up construction, we want to see a copy of the budget as well. And with those documents, and one more, the anchor experience, right? If someone's building a 35-unit apartment complex, much like my fix and flip and ground up construction products, I need to see an anchor transaction. I need to see that they've been there and done that. Doesn't have to even be in the same location. If they built a 35 unit in Florida and now they're going to do one in North Carolina, that's fine. But I just need to see if they have some experience in the multifamily space. If you guys send that in, we could produce a letter of intent. The difference between this product and our fix and flip and ground up construction products is we're actually going to underwrite this file up front. So not only are we going to have our rehab department opine on the budget and give us the numbers, we have a market analysis giving us the NOI. We have an underwrite of the entire market and seeing what we could get for that exit. We look at the whole transaction, we underwrite the borrower, we look at everything that's going on, and we give you an LOI. That LOI is a commitment. So as long as everything on that LOI is correct, you're going to be able to close upon that transaction. Just note that it takes a little bit longer. It's not as easy as a review as a fix and flip or ground up construction. Each one of these transactions are incredibly unique and the markets are unique, and we have to take our time looking through these products. So when you submit an LOI, think of it almost like a rehab review, all of those other reviews combined. We're going to come back with questions, get the questions answered. We'll get it reviewed. We have sometimes turnaround where it could potentially be next day. Sometimes it's 2 or 3 days, depending on the size, scope, and what your borrower is requesting. Multi-asset should be really awesome program for everybody here because I know we've seen this loan a lot over the last 3 years where we have our awesome borrower that we do a bunch of business with, and now they're going to build 30 homes, right? They're going to build a development. Well, on our fix and flip and ground up construction lines, we have limitations. I could write 10 loans for that borrower, up to a certain loan balance for that borrower, and maybe they don't want to phase out their project. Maybe they're not going to do 10, 10, and 10. They want to do all 30 at the exact same time. Our multi-asset loan is one loan. It covers all 30 properties. Only one appraisal per unit type, right? So if all 30 properties are the same, you're only ordering one appraisal. It's the same kind of underwrite as a fix and flip, right? So it's way easier. And your borrowers qualify based off of their gold and platinum status with us. So if they've already qualified, they're a platinum borrower and they've built homes and now they want to build out a development of 20 homes, and their track record makes sense, they're going to qualify for this one loan. And it goes up, both of these loans, whether it's multifamily or multi-asset, goes up to a $20 million loan balance. And you'll see when you start submitting those LOIs that it's a much deeper dive on the front end to make sure everything makes sense. And you'll see the different types of questions that could come back. And again, if anyone has any questions about those products, let's talk about it at the Q&A section here. Feel free to ask questions. For multi-asset, same thing. I want to see a term sheet, a budget, and the experience. Multi-asset is along the same lines as a fix and flip and ground up, like I said, so it's a lot more streamlined. All right, and then probably one of the most exciting sections. I always like to talk about what's coming and what we're working on. So the first thing that's coming soon, and this is expected by end of month, is automated emails. So one of the automated emails is going to be, for example, when our rehab review gets submitted, you're going to get an automated email saying it was submitted. And when it gets suspended because we have questions, you'll get an automated email. So this is going to prevent, so previously you have your loan intake representative. When your loan gets approved or suspended or whatever happens to it, your loan intake representative is taking the information from that, writing you an email and sending you an email, right? And that just takes time. Maybe they're working on something else. So the automated emails isn't only for the rehab department. It's going to go through track record, entity. It's going to go through the different phases of our loans, such as the different approvals. You're already receiving some emails, but it's going to be a lot more robust as we get all those sub workflows, the track, entity, and rehab into that. So we're really excited about that. It's going to save us a lot of time, and it's going to give you a lot more information on where your loan is. In addition to that, this is at the last bullet point. It says automated DocuSign. So anything that you're currently signing and we're emailing to you and saying, hey, get this signed so we can move your loan forward. Maybe it's the loan estimate, maybe it's the draw schedule. Moving forward, those are just going to be DocuSign to you right out of our system. And as soon as you sign that document, it's automatically uploaded to the exact condition it should be in. And you don't have to worry about, signing it, emailing it to us, docu-signing it to yourself or anything like that. It's all going to come from our system and it's going to automatically be uploaded to that condition. That's going to happen by end of month as well. So this next one is actually a really big update. This is our new entity document. So this is going to be another white label document that's going to be required on every transaction. But what it's designed to be is a corporate resolution for the transaction that can hopefully eliminate about 90% of our back and forth with our entity department. So if you guys are submitting any loans and we're asking, hey, there's 3 members and one of them is the manager and there's a secretary and there's a president, who are they? You need to define them. Or maybe that operating agreement wasn't executed, or maybe the percentages weren't on that operating agreement. Whatever that is, we will now have a corporate resolution document that could potentially clear all of that up and make our review a lot easier, right? So not only is your review going to be quicker, but there's going to be a lot less back and forth because this one document should solve about most of our issues. The expectation for that is that it's going to come out early May. And note that we still don't have a great solution for nested entities. Nested entities are complicated and the borrowers rarely provide everything that's needed on a nested entity. And the corporate resolution is more for entities with 1 to 6 members, and less so for nested entities within entities. Third party, a launch and assignment completion. I think this is really exciting. Anybody who's table funding a transaction with us is going to think this is exciting. When this comes out, we'll let you guys know we're going to need 10 copies of POAs. But what this is we're going to be using a third party company. And that third party company is going to complete your launch and assignment for you on every transaction and get it to the closing table. We've had a number of issues where we're closing these transactions. And even though you guys are properly sending it where they need to go, the title company is not recording it, or their title company is not sending us the documents back. This is going to prevent that. It's going to take it out of your hands. You're not going to have to get these things notarized anymore. You're not going to have to overnight them to closing. We're going to take care of all of that for you. It's going to result in a $150 fee, but I'd imagine that's something similar to what you guys are paying today to get it done. The next super awesome thing is the updated table funding agreements. So this is coming soon. As many people here know, we had a buyback clause in our table funding agreements. Very unpopular. It's something that we have had for a long time. Not something that we can really execute on, and it's something that we're removing. So everyone's going to get an updated table funding agreement. And on those table funding agreements, we're going to remove that buyback clause, and we're going to keep a premium recapture. So a premium recapture says, hey, if I paid you a point in premium for a rental finance loan and your borrower defaulted in month 2, you would owe me that point back. So that doesn't include your origination fees or anything like that. It's just any fees that you earn in addition that we're paying out on top of whatever you're closing at. The most exciting, 2 of the most exciting things here are next is our white label closing and servicing. So I know some of our competitors are doing this and they're having great success with it. We're a little bit late to the party, but we're working better than ever. So this is, all of our closing department, anything post-closing is going to be fully white label, including landing pages for all of your companies, right? So if you have you'll have a landing page to your own company that your borrowers can log into and access draws, which kind of aims to the next one, which is post-closing draw review and management. We want you guys to have access to your borrowers post-closing so you could check out the draws, so you could check out the photos of inspections. That one, the one problem with that one is that you need to have authority, right? You need to have a third-party authorization signed. So what we're going to do is we're going to start including third-party authorizations within the closing package so that when we close, you're already authorized to view everything post-close for that transaction. So it's a ton of updates. Both of those last 2, we're aiming for Q3. Those are huge updates to what we're currently doing. So Q3 is our goal. It's what we want to hit. But it's not a guarantee. We'll have more updates. We'll have more webinars where we can keep you updated on it. But all of these changes are, again, I think they're massive changes. And if you guys recall from the beginning of this call, I said this is the best month we're ever going to have, not that we're ever had to this date. We're going to have way better months coming, and a lot of this stuff is just going to be cherry on top of the what we're already doing. And a lot of that is because of everybody on this call. So we really appreciate all the business we've been getting, executing and pushing loans and giving your borrowers the ability to close these transactions. We really appreciate that. And it's coming through here. And, because of the success we've been having, we are getting more and more resources to build this out and make it even better. All right, that's it. We're going to go to the Q&A. As always, if you have any questions, you can raise your hand. Were there any questions already asked? There were. So it says pro forma of 3 or 5 years out. We're just looking for the stabilized income. So whatever they think the stabilized income is going to be, when you order the appraisal for a multifamily transaction, they're going to provide the stabilized income. So ultimately on those transactions, you're going to be going 100% off of the appraisal, and whatever the appraisal provides is that stabilized income. Courtney Hemsley, multi-asset. Can all assets be within the same community? Example, 10 spec homes within the same neighborhood. Yes. So it's a cross-collateralization product. Our multifamily multi-asset can also include other cross-collateralizations for closing. So if they own another property that's free and clear and they want to include that to limit their cash to a closing, definitely some advantages there, and it is in the sales tool as well. All right, Lauren Lockett. Not sure if I'm losing my mind, but bridge loans without asset verification. I'm not getting an error in the size or that all mortgage payments have to be rolled in. Is that no longer required? Can I roll in 6 months and have them pay the balance and not require asset verification? It doesn't show any additional liquidity requirements are necessary. If it shows any liquidity requirement, then you have asset verification. Whether you do 3, 6, 9, or 12 months, our formula for how much assets have to be shown is it's the greater of unescrowed payments or the cash due at closing plus 3 months. So if you do, you should have asset verification. And let me just confirm. 1 second. You know what? I think our asset verification, I don't think we have asset verification or payment escrows for bridge loans. I'll look into that, Lauren, but I'll get back in touch with you on the refinances. All right. Lewis Jeffries, is multi-asset available in Chicago? It is. But as always, like Cuyahoga County, specific areas, we're going to look at them. We can still write them, but we might be a little bit more strict on looking at them. Lauren, you might want to talk about this one because I'm not sure. You said how will that impact concentration issues TVC typically has? Can you talk about that? Are you talking about for the multifamily or the multi-asset product? I don't know if she's could be unmuted. So I believe you're talking about the multi-asset product. There's no concentration issue for that because there's no unit limit and the dollar limit's 20 million, right? So if they're building 40 homes or they're building 70 homes, as long as it's under 20 million and the exit makes sense, you're going to look at the market there and make sure that market can support, selling 5 homes a month, so that they can exit the loan. There's not really a concentration issue when it comes, and it's not additive, right? So the multifamily, multi-asset are totally different lines. So if you have a borrower that has 10 million out with us on our fix and flip and ground up construction lines, the multi-asset product is still available to them. Will the entity corporate resolution be a one-time thing per entity, or will it be for every transaction? I'd imagine we're going to be able to reuse it. I don't think there's any property-specific information on there. Again, the document's not 100% final, so we're just going through some final reviews on it. So hopefully it could be used, one borrower. Once it's signed, it's good for the next deal too, as long as the entity structure is still the same. So hopefully we don't have to have the borrower sign the same document multiple times, but I still have to see it and see if there's any property-specific information on it. What are the fees on multifamily versus the multi-asset? Yeah, the fees right now are the same. So the product is not the same as a fix and flip or ground up construction. I did want to talk about the fees for multifamily and multi-asset. Um, for one, give me 1 second. I want to pull up something here. For one, it's a lot more expensive to close a multifamily and multi-asset transaction. And what we've done when we were creating this, we were looking at not only the costs that we're going to have to come out of pocket for, but what the market is for when it comes to multifamily and multi-asset. The flat fees on a transaction can come up to, sometimes greater than a quarter point. But what those fees are for is, first off, the underwriting. We have to underwrite we have to do feasibility tests, zoning, site visits. So a lot of those properties are going to include us flying to that property, checking it out during the rehab process. Is going to require somebody to go down there, stay there, fly them there, housing, get them a car over to the property. These transactions are incredibly complicated. The closing attorney and legal underwrite fee, each one of these docs are unique. This isn't the same as a fix and flip where it's lightning docs where we're just spitting out the same docs on every transaction. Um, each one of these are uniquely written out we by our attorney, and those fees are inclusive of that. Um, but from what I've seen, everything we're doing is market. All right, Natalie. Hey, Brendan, for ground up construction, need to be shovel ready, or are you expanding to include horizontal dev on these new higher loan amount programs? So horizontal can be included when you're doing a multifamily or multi-asset transaction. You can include horizontal. It has to be a certain percentage of the exit. The vertical has to be a certain percentage of the exit when we're validating it. So you might find a situation where we can only finance a certain portion of the horizontal. But honestly, we could fund the whole thing if the deal makes sense and it fits in the loan amount. But we can't just do horizontal, right? So there has to be a vertical component, and the vertical component has to be the majority of the loan. Steven, Steph, what's going on? What about going non-Dutch on loans? A lot of lenders offering it to non-experienced borrowers. Yep. So we only have our Dutch loans for bronze and silver. We're constantly looking in the market. I think actually a few years, like Kiavi's been doing Dutch trans or non-Dutch transactions for bronze and silver borrowers for a long time. We're familiar with the market. When you create our bonds and our different, funding facilities that we've created. Our programs have always been kind of geared more towards those experienced investors doing the major construction, ground up construction, and less so those lesser experienced. Although we've enhanced our programs now and we're seeing a lot more bronze and silver transactions coming in, um, they're not our primary focus. So I don't have an answer for you today, but we're constantly looking at it, and it's definitely something that we're considering. All right, Courtney, you have 10 spec builds on the same street, and committee suggested we only do three, then come back to the other seven. The concern with committee was the concentration of that many builds on one street. Can this be looked at on the TDC side? For the multifamily and multi-asset product, yes. So you could do all 10, even if they're on the same street, they usually are. You would be able to do all 10 at the same time. So yes, Courtney, if you wanna send me an email about this after the call or during the call, I'll get to it and get back to you. All right, Karen. Oh, I'm sorry. I think I missed my spot here. All right, Karen. For ground construction, fix and flip, if we request an exception, like the borrower qualifies for gold but is one or two properties short of platinum pricing, or experience limits the loan amount, what factors does TVC consider for approval? What compensating factor do you look at? Um, I always say the anchor transaction, especially if you're doing like a ground up construction or if you're doing let's say you're doing a $2 million build, right? And your borrower has four properties and three of them are $2 million bills that they sold in the last 12 months. Let's call them gold. We'll make that exception just because the borrower's experience stands on its own and it's so strong. In general, if a borrower is missing a tier by one unit and everything else makes sense, it's not that big of a deal. That's something that we'll generally can make an exception on. It's just something that has to be requested. Um, Now, if there are a few properties short of platinum plus or platinum pricing, then it could be a little bit different. You might want to look at, you could look at assets. Assets is always one of the biggest things when it comes to compensating factors. If your borrower has, $1 million in the bank or $600,000 in the bank, That's always going to help you for a transaction, especially if that transaction only requires $100,000 and they have 600,000. That could be a great compensating factor. Again, a term sheet. If they're getting a better term sheet somewhere else, you could lose that deal, and you send that in for a price match. That's a great way to get those lower points. And if it's talking about loan amount, again, whenever it comes to loan amount, we're kind of just looking at the borrower has been there and done that. Um, and that they actually have that experience, right? So we limit bronze borrowers to 500, I think, and silver to 650,000. On those transactions, if it's in a market where the average home price is 700,000, it might make a lot of sense, but we still want to look at that transaction because maybe this borrower has never flipped a home before. And not only was their purchase price high, but also their rehab budget was major construction. And now we're not comfortable lending on that. So you got to look at the whole thing. You should work with your business development, your account executive, and they're going to figure out exactly what you need to get that loan approved. Terrence, do you require entitlements and permits for horizontal development? So that you do purchases or refinances, anything that's on refinances, yes, we do require that everything's entitled and the permits are in place, and that we have full plans on any refinance. Sasha, so for multifamily, does it include mixed use or as well, or is it strictly residential? It includes mixed use. There's a limitation to it. I think 51% of the income has to come from the multifamily units. But if there's a store at the bottom of the apartment complex, or there's 10 units and there's a shop in the front, we do that. And then Lauren, I think I did answer your question. How will the multiple asset build out program impact concentration issues TVC typically has? It doesn't. It's a totally different line. All right. Does anybody else have any other questions? All right. You could always raise your hand. You could type it in. I'll be happy to keep going. I really appreciate everybody jumping on the call. We are working on a lot. I think it's really fun and interesting. I think we have, a ton of new accounts signing on to us. You've been seeing us at more and more events. I do believe we're going to be hosting some events or sponsoring some events coming up. We'll let everybody know, and we'll send you guys some emails on events that we're going to be at. We'd love to meet everybody in person. And if you guys were at the Drosy event in February or any of the events that we were at February, it was a great connection to see and meet different TPOs that we work with and partners. And again, this month's going to be great. I hope you guys are executing and crushing it, not only with TVC, but anybody else, anywhere else you're delivering those loans. And the one last thing I'll say is, hey, oh my gosh, I forgot to mention this. On the DSCR product, if you lock your loan on any DSCR loan with us before the end of this month, we are going to waive those $1,700 in fees. So, speak of that, I also accept transfer appraisals. So if you have an appraisal ordered through a different AMC or through a different, a lender ordered it through a DAMC, if you get the transfer letter, you get us the XML file in the back, we'll use that as long as it was ordered through an AMC. So we could transfer appraisals if you want to move any DSCR loans and take advantage of that before the end of the month. You just got to get your deals in. You got to lock them before the end of the month, and we're going to waive those fees. All right. Thank you so much, everybody, for attending. We'll send a copy of this out if anybody else wants to see it, or if you have any other, people that couldn't make the call. We really appreciate your time. Oh, there's Q&As, two more Q&As. Thank you. You're welcome. For fix and flip and ground up construction, are valuation review and rehab review part of the underwriting review, or are they completed separately? They are completed separately. So the underwrite does not include rehab or valuation. Those are independent reviews that happen when those documents come in. So as soon as you have the appraisal and anything my rehab department requested from your rehab overview form. So when you submit a file to us, your overview form is going to dictate what documents you need at rehab. So if it's major construction and it's a refinance, well, now I need plans and permits, right? If it's ground construction, plans and permits survey. So we'll let you know right when you submit that overview form, it's going to go into the system. And then as soon as those documents are qualified, you submit that back to us and we're going to clear the rehab review. So you can actually get a rehab review done before an underwrite, and you could get it done after an underwrite, before a CTC. It just has to happen before a CTC. Isaac, transfer reports accepted for bridge as well. Yeah, all of our products accept transfer appraisals. Again, you just have to have the transfer and you have to have the XML in the back, and it has to be ordered through an AMC. So we've been seeing some people try to send us appraisals that are ordered directly from an appraiser. or your borrower ordered them, we can't accept those. We'll never be able to accept them. So if it's direct to an appraiser, we can't use it, except for the multifamily multi-asset product. Only specific appraisers for that. Sasha, if I locked a file on March 30th and I have a CTC closing next week, will that be waived that you're not collecting? Are you talking about an extension fee? Because it should be about 45 days, so I think you're probably close to expire. I don't know, you're only 16 days in. Um, if you locked in by 3:30, I have to check when the program went live, but I think you should be fine. I think you're going to get that discount. Sasha's asking if he gets the discount for waiving the underwriting and closing fees on a DSCR loan that was locked in on March 30th. I think it actually did go live in March. So I'll check in on that. If you have a specific loan ID and you want to send me an email, I'll jump in that file and check it out for you. All right. Anybody else? All right. I won't say my goodbyes too many more times. Thank you everybody for attending. Appreciate that you all came. Good luck here through the end of the month. I'm hoping we have the best month ever. I hope all of you guys have the best month ever. Until next month. Thanks, everybody.